So this is for startups, AI, tech, and service-based businesses at or above $1 million ARR who want to keep building profitable products and scaling their ARR quarter on quarter while the salesy stuff is 100% handled. So I'm just going to get into why this exists. I'm going to show you some case studies. I'm going to show you the framework, how everything works in real time, and you can see if this is for you. So this exists simply because over the last few months, I've been building something called the Fractional Growth Advisor model. It's for founders, BD, sales leaders who are tired of trying to build teams, hire SDRs, post content, or keep up with 100 different channels just to land a few decent conversations. So this is the system that replaces all of that. Okay. It just puts highly qualified enterprise calls on your calendar with the exact companies you actually want to work with and have a problem that you can solve. So I've been spending the last few years watching great companies with solid products fail to get traction because their sales model relied on outdated strategies and way overcomplicated funnels instead of simplicity. So they're trying to do too much too soon and they want results yesterday. They'd have 5 to 10 SDRs chasing leads and still end up with empty calendars. So I built a model that flips all of that over. All you need is one dedicated AI leverage growth advisor and one closer, either yourself, sales team, or build one. Okay. So that's all you need. And everything else is infrastructure. Okay. So just those two things are all you need. And just simply a quick background on who am I and why should you care? So my name's Kai Cabero. I'm the founder of thegrowthadvisor.io and obsidianlabs.io. And before all this, I built a string of multi-six-figure businesses using the same systems I use for my clients. And over the last 4 years, my partners and I have collectively closed over 5 mil in outbound B2B sales across 5 different industries. So everything from AI and robotics to enterprise SaaS, blockchain, coaching, consulting, service-based businesses, you name it. And I handle sales and strategy, and that's just always been what I've been into. And I created the Fractional Growth Advisor model to solve just one problem, to help ambitious companies generate predictable, high-fit deal flow at scale without wasting time, headcount, or internal bandwidth, okay? So you don't need these big bloated teams. I just got off a call the other day with a company that does about 25 mil data center company, and they also build their own GPUs and stuff like that. And they were just like, yeah, so we're just going to hire a bunch of sales managers and see if that works. So it's like, well, you don't have any calls on the calendar. Who are these sales managers going to speak to? Who are they going to close? You got no one to close. So most people are just building this stuff backwards. And the systems and models I've built have opened doors with some of the largest organizations on the planet. So ExxonMobil, 349 Bill, Samsung, British Petroleum, Lenovo, Ubisoft, Binance, Ava Labs, Polygon, Fox Corporation, Universal, Marriott Hotels, Outlier Ventures, Casper Network, Deloitte, Trust Wallet, Berachain, Napster, Flight3, BitMEX, Seller Network, and Kraken, and to name a few, there's so many more. I could be here all day. And all of it came from one simple discipline, systems that are just very simple, repeatable, and built to scale. We don't do any complexity here. So let's dive straight into the case studies and observations and proof from the campaigns we've been running for our clients. So case study 1, Phala Network or Phala.com, partnered with NVIDIA, Google, and Linux. These guys are now at 3.1 mil revenue with a very small team. And this happened this year. So they're just essentially a decentralized cloud computing platform designed to provide a secure and private infrastructure for executing smart contracts. Now, they don't just work on-chain, they work off-chain as well. So it enables us to go into enterprise as well. So it's very cool. Before they were working with me, Phala had enterprise-grade tech, but no structure for consistent deal flow. So most conversations came from word of mouth or existing partnerships. I'm pretty sure that sounds very familiar. No one owned outbound, and the team wanted visibility with Fortune 500 level buyers, but didn't have a repeatable process to make it happen. So typical scenario, referrals, network, etc. No predictable process in place. So all I did was build a dedicated outbound environment from scratch, research, data, sequencing, messaging architecture, positioning, intent signals, and campaign management. So we'd deep dive into who exactly they want to work with. We'd collect that data or map that data points out. We'd build out the sequencing and messaging architecture, exactly what we're going to say, because Fortune 500 level buyers don't just get on the call with anyone. And positioning. So the fact that they are partnered with these guys, NVIDIA, Google, and Linux already is a really big angle to use. specifically for a campaign like this. And we also want to know that these guys are dealing or need what they're buying. So, we'd focus on various different intent signals, what these buyers are actually saying in the market, and then obviously managing all of that end to end for Phala. So messaging was heavily focused on leveraging confidential AI, so security, in industries where security was paramount. So if we're going enterprise, we could look at, data center wise or even legal firms, manufacturing, etc. And this was the results after the first 14 days. And I'm going to get into the results of this bit of the campaign in just a minute. But, we didn't hardly send that many emails in the first 14 days. It was just a very small batch test. And after then, we started scaling up. So these figures 1 and 2 is something I'm just going to explain in a minute. There's just numbers on the screen right now. So the overview simply was 2 test sequences were deployed during the first 14 days to validate data, messaging, market resonance, and offer positioning, because a lot of this stuff is just about resonance and understanding what these human beings want to do or what they need to buy, or what particular pain points or threat level 1 problems they're facing in their business right now, and if you guys are positioned as the solution. So the interpretation, so basically what these figures 1 and 2 mean, simply sequence 1 or figure 1 validated initial traction. We had 25 interested prospects from 2,540 email sends. All right. So the second smaller sequence focused on refined targeting and messaging, which produced a higher quality yield. So nearly 70% of all replies expressed interest to meet. So it was a great success in the first 14 days. So, and the outcome was simply across both sequences, we had 36 enterprise prospects engaged, as in they want to speak to us, get on a call, have a meeting, including data center and blockchain infrastructure companies, ranging from 10 mil to 100 mil in annual revenue. Okay, so they're not small companies, right? These early results confirm that the fractional growth advisor model could generate measurable, repeatable interest in under 2 weeks from launch. So typically, you could be trying to figure this out yourself. This just took 2 weeks from launching campaigns. So, and as you can see, there's a quick screenshot here, figure 3, just going over Slack thread showing coordination for a meet with Genesis Digital Assets that do about 33 mil a year that responded during Phala's first campaign cycle. And obviously I was just talking to the founders in the biz dev team there just to take this call. And then their sales team or the sales team we build for them would then take the call, close it, etc. Because these are pre-qualified, right? These people already show intent. They already said, yeah, this is something we need. Get on the call. 80% of the deal was already done because all they need to do is tap it in. They're on the green, right? They're on the final hole. So case study 2, Boost Robotics.ai. So these are recently backed by Y Combinator, and their team is composed of ex-Boston Dynamics engineers. So super smart guys. And they have not been around for long, but they were founded in 2025. And over the last few months, they've already hit 220K in annual revenue, which is great because they're actually building autonomous robots, right? They're going to distribute them and pilot them in data centers. So the beautiful thing about the industry that I work in is AI, robotics, tech, blockchain. It's a similar ecosystem. Everyone can kind of work with each other. So, for example, we can turn one call into 3 or 4, right? Simply because my clients sell not similar products, but they sell in a similar industry. So there's a lot of potential there. So if you're reading or watching this and you're thinking, oh, that's actually very helpful for my company, then you can also reach out and book a call, speak to an advisor somewhere at the bottom of this video, and we could also introduce you, okay? So what I've also done, because most people are quite skeptical about this kind of process or this, approach, is schedule them a few calls with some of these guys already, and obviously these guys will sing my praises, not to be arrogant, but that's what they will do. So before they were working with me, Boost Robotics had just graduated from their YCOM batch. They'd hit 220K in rev with a 2-person team, both technical founders and ex-Boston Dynamics engineers. Their mission was to deploy on-site autonomous robots for testing and maintenance, starting in the data center and infra space. But despite strong tech and early validation, their growth was bottlenecked by a lack of process because there's just 2 guys, right? And every deal came from prior contacts or manual LinkedIn outreach run between engineering sprints. So they'd like do a sprint for deals or leads or whatever, and then they'd have to get their head back down and continue building their product. So they're kind of chasing their own tail a little bit. One can't come, both can't be done right at the same time. At least in their case. So there was no consistent way to reach enterprise decision makers or translate their technical capability into commercial traction. So they would, like I said, they were too bogged down in engineering work and building the product and making sure it's good, but they don't have any leads. They don't have any deals in the pipeline. There's no one closing, right? So each time they went heads down on product development, the pipeline flatlined. It's just a typical scenario. I see it all the time. So what I did was I implemented the Fractional Growth Advisor model, let's just call it the FGA, as a dedicated catalyst that could run independently of the founder's time. So either it run by itself or managed by myself. And the rollout simply included establishing predictable go-to-market architecture end-to-end, because they're still fairly new, right? They're a little bit newer than Phala. Phala's at 3.1 mil rev. These guys 220, but within months they're doing very well. So developing early test campaigns, one targeting data centers in the 10 mil to 100 mil revenue range, another aimed at industrial/manufacturing robotics integration. So companies that have assembly lines and all that stuff, they deploy those robots and they could run that, reduce human headcount, etc. Or humans can just run and operate the robots. So the structuring and positioning was around so non-technical executives could instantly see operational savings and ROI, and building an automated response layer that logged every positive reply and refined targeting daily. So build a process that handles the responses and ensures all of the responses are logged, because at this early stage, we're still mapping out, some form of PMF before we're doing go-to-market, right? So we're still going to have to collect and collate all of the responses we get, whether negative or positive, because that feeds back into what people actually want, right? You don't just build stuff on a hunch or a guess. You build stuff based on what the humans, I keep saying humans, but what the market is actually telling you, okay? And then we were running continuous scalability and doing like 5,000 sends per day with zero founder input. That's only after the initial 2-week test period, okay? So after the first 2 weeks, 14 days, these are the results. Obviously, this is a bit more juicier than Phala's, but it was an exciting process because I hadn't actually tested a robotics offer in the market before, and the responses were great. So the campaign overview. So 2 outbound sequences deployed in parallel to validate data accuracy, vertical targeting, and messaging resonance across automation and data center markets, okay? So we had to make sure that who we were speaking to were the right kind of people. There's not really any head of robotics at some of these companies, so it was either CTO or chief engineer or someone like that. Even biz dev was an angle we tested as well. Each sequence ran under identical sending conditions to isolate performance by audience segment. So figure 4 simply, so here, this one here, we focus on data centers that facilitated for enterprise, okay? And figure 5 just here, we focus on industrial. So ExxonMobil, Scania, etc. Both campaigns were tested with live founder feedback for approval. So everything, the 2 founders saw everything in real time. We work very, very closely with them one-on-one, weekly catch-ups, daily reporting, all of that stuff, and daily feedback loops, which is super critical at this point to ensure every response is qualified, logged, and fed back into the system for refinement. So it's just a continuous feedback loop. And without that, you're cooked. So interpretation, figures 4 and 5 both validated the commercial use case, so it's a success. Figure 4, data centers delivered higher total volume. We had 26 high quality responses, people that said, yes, I want to meet with you. This sounds interesting. How can we deploy, etc. Because we were doing a live pilot, right? So, and they only wanted to get 10, but we ended up getting way, way more. So we ended up getting 37. So it's like, way more. So 26 high quality responses, okay? So these guys, this proved market readiness for autonomous robotic solutions, and figure 5 attracted fewer but more senior respondents, leading directly to pilot discussions. So these were more people that were a little bit senior in the in the food chain, and they were just happy to just get started with a pilot. So together they produced 37 enterprise conversations under 30 days and gave Boost its first run of traction since graduating YC. So we eliminated all that stress of trying to figure out who the hell they're going to speak to, where they're going to find them, how they're going to get them on calls, and when are they going to deploy pilots, right? Because they got a lot riding on this, shall we say. So this data confirmed that high-ticket robotics deals could be sourced predictably without expanding the team or pausing R&D. So, outcome. By day 20, Boost secured a high-fit conversation with Lenovo and multiple 10 mil to 100 mil infrastructure firms. I believe Lenovo do 69 billion and multiple 10 mil to 100 mil infrastructure firms. So by day 35, the data center vertical expanded and yielded a $271 million conversation, fully sourced through the Fractional Growth Advisor model, or FGA. And the founders stay focused on engineering while their calendars fill automatically with highly qualified buyers. Okay, this was the response from Lenovo. These two figures. Enterprise conversation initiated with Lenovo, as you can see. Yes, please book next week, etc. And these guys are ranked 196 in the Fortune Global 500. And this just confirms everything. So their interest in Boost and their robot systems led to a scheduled discussion the following week, making one of the earliest enterprise engagements generated through the FGA model. So, moving forward to case study 3, GBM auction. They're a Series A SaaS. They've raised $5 million, Series A, and they are an auction platform that gamifies digital asset bidding. So either on-chain assets, or now they're pushing into the traditional market sense. So think like Goldin's auctions and any other auction seller, real estate, classic cars, collectibles, anything on the planet, right? That can be auctioned. The technology allows bidders to earn money when they lose and sellers see more price action. This is a multi-billion-dollar industry. Collectibles are now even still more on the rise, and they've simply reward their bidders for bidding through this mechanism. Okay, so again, the tech allows bidders to earn money when they lose and sellers see more price action. So it's a win-win, no-brainer to install this inside any auction system or auction framework. Because there's a bunch of different auction systems, right? We worked together for like 2 years. They'd raised 5 mil, had a proven product, and one head of partnerships. Cameron was managing all sales, partnerships, and outbound alone, which is a common theme. With only one person covering a global market, deal flow clearly suffered. So deals came from existing partnerships and sporadic introductions. The target industry was also outdated, which meant opportunity was high, but product knowledge, trust, and hesitation was at an all-time high. So they're not typically used to being sold to, at least with a more direct, colder approach. And again, at the end of the day, we don't want to damage anyone's reputation or anything like that. So we have to go in and build as much trust as possible very quickly. So GBM needed a system that could bring consistency and scale without damaging rep or brand equity in a small interconnected industry. So what I did was simple. I implemented a volume-based approach tailored for the blockchain and auction verticals, built for precision. I rebuilt their pipeline and sourced verified contacts from high-value digital asset and physical asset industries, crafted messaging frameworks that adapted to the sub-niches, virtual assets, in-game assets, and physical traditional assets. And I deployed agents, AI agents, to automate outreach, follow-ups, and reporting so Cameron could focus on closing deals. So pushing all the deals to him so we can close. And I established daily reporting and Slack updates, daily touch points to review replies, messaging tweaks, and sequence performance. So it's an ongoing, living, breathing process. It's not just like set and forget or anything like that, right? It's an actual thing that we work on together. And I designed messaging that aligned with GBM's tone, thought leadership, and value add. Nothing aggressive, okay? We want to build trust and long-term relationships with these guys, with the market. And this is the results after the first 90 days. And we actually didn't need to send that many because figures 7 and 8 just simply show only 1,200 emails sent and all these replies we garnered. There was another few campaigns that were within this as well. And 2 test sequences were deployed over 90 days to confirm data accuracy, conversion, and commercial potential across digital and physical asset industries. So interpretation is pretty simple. Straightforward. Across both sequences, GBM generated over 100 qualified sales opportunities in the first quarter, driving a measurable pipeline value between 2 mil and 4 mil. New conversations included Fox, BitCrunch, Ava Labs, and multiple partners across Ethereum and Polygon networks. Each reply led directly to demo bookings, followed by several signed partnership agreements, one of which yielded a $500,000 to $2 million potential earnings. I'll show you that in a minute. The campaigns validated Outbound as a sustainable channel, and the outcome was simply 100 plus highly qualified opportunities booked in 90 days, signed partnerships and pilot programs with multi-billion and multi-million dollar companies, reallocation of internal focus from prospecting to closing, and obviously now GBM can go forward into brand expansion, established proof that the FGA model could outperform previous activities by 5x in cost per deal efficiency. So basically it was just 5 times more than what a lone BD or just someone just doing this by themselves could do, or a team even in that regard. So GBM extended my engagement to include strategic advisory and representation. I was flown out to Web Summit in Lisbon, which is one of Europe's biggest tech conferences, an event. And that was in Portugal to represent the company in person. Flights, accom, and full travel were covered by GBM, and I'll just get into the figures in just a minute. So figure 9 shows confirmation of a closed deal. WhatsApp exchange confirming signed contracts and projected rev potential between 500K to 2 mil. So you can see Cameron here accepting a signed agreement from a deal. Figure 10, enterprise engagement with Fox. Although they don't run auctions, they wanted to be a part of this process simply because Fox were interested in coming on chain and building out some infrastructure there, and GBM could help them with that. And we had email confirmations from Fox, BitCrunch, and Ava Labs acknowledging intent to connect and discuss sales opportunities. So as you can see here, let's connect next week. And we had the head of ecosystem growth from BitCrunch here. Yes, thanks for reaching out, etc. Here's my Calendly. Please talk. Let's talk. And then we had GBM here, who announced a official partnership with Avalanche, which aka Ava Labs, which is fantastic. And this is me representing GBM at Web Summit in Lisbon. As part of the team. So these campaigns validated more than just high-fit conversations. It proved that when infrastructure, volume, and resonance are aligned, the sales cycle compresses, okay? So the sales cycle gets shorter simply because you're accelerating things, okay? You're not just sitting there one by one doing stuff or relying on anyone else, SDRs, referrals, network, any of that stuff, trying to figure this out. In the past, similar enterprise convos would have taken 3 to 12 months at best, and in some scenarios longer to close. These happen in weeks, okay? So that didn't come from a new funnel, a fancy CRM, the latest tech, SDRs, or any other strategy they tried in the past. It came from how they sell, okay? So obviously this is about deal flow and closing deals, etc. But how do they do that? So we had to apply or build out a sales process that enables people to close faster, okay? So how to sell faster to enterprise, this is called strategy map selling. And it's a process I came up with that simply explains that the GTM process that delivers intent. This is a GTM process that delivers intent, replies, interest, and high-fit conversations with the right people. But the sale itself hinges on what happens next. If the conversation stalls, the infrastructure means nothing. That's why I developed an entire sales process from the ground up. I call it strategy map selling. And it's how my clients and I close faster, align expectations, and turn interest into signed agreements without wasting time on endless back and forth. So simply, this framework was born out of a consistent bottleneck I kept hearing in almost every founder, BD, and sales leader convo I had, and I speak with about 10 to 20 of these guys a week. In AI, robotics, deep tech, SaaS, coaching, and consulting, around 65 to 70% of these people have said some version of this. And you might be nodding your head thinking, yeah, this sounds pretty similar. We've worked with lead gen agencies or consultants before. We spent months explaining our product, how to position it, how to talk to customers, what benefits to highlight, etc. They nodded, took notes, and came back with leads that still didn't understand what we do. Most of them useless, okay? Nobody actually understands what we build. And in this space, it's very common, okay? Most of the people I speak with are very technical led, and they don't have the sales background or experience to be able to express this in a way that people would buy it. So if that sounds familiar, that's because most don't understand the market or the products within it. So they can't speak your language, compute, AI, infra, data, or robotics, so the market tunes them out naturally. So this is why I built this process, strategy map selling, to remove that barrier entirely. It's designed to sell complex products or services without complexity, where precision, speed, and clarity close faster than persuasion ever could. So I live and work inside this world every day. Phala.com is partnered with NVIDIA and Google. Boost came out of Boston Dynamics and YC. Okay, so let me just change that. So, and to sell here, I have to speak their language, right? So compared to traditional sales or perhaps processes already established that you have in-house already, here's how strategy map selling shapes up. So as you can see, we've got 2 columns: strategy map selling and traditional sales. Traditional sales is unclear expectations, multiple calls, endless back and forth. Implementation feels slow and outdated and seen as a salesman. SMS is simply prospects see clear deliverables up front. You have 2 steps: triage and onboarding. Okay, there's nothing really in between. Implementation feels immediate, and you position as a problem solver, not a salesperson. So as you can see, I go into more detail here. You can hit thesis at the bottom of this. I mean, you can see a small preview of it here. This is actually really cool. So you can see the core framework, the triage call. It's just a quick 10-15 minute call going over everything. And, you know, you ask questions. There's a purpose, insight gained through those things. Closing the triage. Step 2, creating your strategy map, which is the documentation that prospect sees after you've confirmed a fit. And then the 3rd step is simply go to an onboarding call. And I break through all the components of how this all works as well: delivery, ramp up time, success stories, investment, etc., and how all that process works. So you can see a live strategy review call as well here, an onboarding example, and all of the processes in there as well. And if you go to, you can either book a call with me right now, and I'll walk you through this entire process. We'll do our own version of the triage, and you can see how it all works and how this could apply for your business. So yeah, go and pause this and go book a call right now, and then come back to this video, or go to the bottom of this website or this landing page, and you can see thesis, and you can just have a look at this, and you can grab that. So why this works: it simply shortens enterprise cycles from months to weeks because it removes friction. Okay, it anchors every decision to logic, not emotion, and it respects how real companies actually buy through structure and clarity. So this is how we sell inside the FGA model, and it's the missing piece that turns qualified conversations into actual revenue. But what most people miss is the math, and I built this process to compound with scale. Okay. That means a simple 1% reply rate on 5,000 email sends per day means 50 new conversations every month minimum. Even at a conservative 10% close rate, that's 5 new deals per month, or at least in hand, okay? And if your average deal size is 50K to 100K plus, that could be close to 500,000 to $1 million in new ARR without paid ads, SDRs, team bloat, posting content, or dependency on referrals. So that's what all of this is built for, okay? The FGA model equation behind predictable growth. So everything you've seen so far, including case studies from Phala, Boost, and GBM, operates on the same operational frequency. So 50% of that is infrastructure, okay? The actual stuff that makes this stuff happen at scale without much human input, okay? 25% volume, 25% resonance. Okay, these are the 3 things that make this entire process work. And I'm going to get into that right now. So infrastructure, volume, and resonance, these are 3 variables, and nothing else matters outside of this. If one breaks, the system collapses. And I've tested this framework. You would have noticed by now that I've tested this framework across AI, robotics, deep tech, SaaS, consulting, and coaching markets. And it's proven over and over that infra is what keeps you online and alive. It's the silent backbone that ensures delivery, uptime, and consistency inside your business. Volume gives you data and hits you with a reality check. Without enough reach, you can't learn fast enough to improve. Resonance makes it real, messaging that aligns to the market's language and gets decision makers at companies like Lenovo to respond and spend. Every ounce of your success sits somewhere inside that circle, and every successful campaign finds equilibrium between all 3 components. But most founders, BD, and salespeople stall because they're trying to scale off their network. That works until it doesn't, okay? Referrals slow down, pipelines dry up, and investors start asking questions. The truth is, you can't build predictable growth on chance introductions. You build it on foundations, an ecosystem that handles all points from cold stranger to happy paying customer. That's what I do. So my model generates thousands of high fit opportunities every year. You don't need to babysit SDRs, beg your network for referrals, or light your cash on fire attending every event on the planet just to walk away with one email address and a "I'll take this to my CEO" conversation. Instead, you just show up to pre-qualified conversations with decision makers who are interested in buying your product or service. And here's a little bit more about what this looks like in action. And this is figure 12, and it's simply showing Ubisoft replying with a confirmed availability for next steps for a high fit sales conversation. Clear key decision maker, ubisoft.com, clear intent. Okay, hello, sorry for keeping you waiting. I could definitely do a call tomorrow. Figure 13 shows Samsung confirming a specific meeting time, showing clear readiness to engage. Thanks, Kai. Great, 2 p.m. Tuesday would work for me. Alex, key decision maker at Samsung with clear intent. Figure 14, the CEO of Casper Network, 214 mil, responded personally, confirmed heavy interest in next steps, and looped in their CTO, signaling alignment, resonance, and urgency to speak. As you can see here, thanks for email. We'd very much be interested in having a chat. CEO. So if it's not obvious by now, trying to scale through any other channel is the least reliable, profitable way to grow. And the worst part, it chips away at your reputation slowly. The moment you establish infrastructure, volume, and resonance in your business, everything changes. You stop begging your network for introductions that go nowhere. You stop spending your precious time on awkward virtual coffee meetings with no clear agenda. You stop chasing low-value prospects or freebie seekers that were never serious about buying from you in the first place. And simply just imagine this, right, for a minute. Your team or yourself receives pre-qualified deals from key decision makers every day who already know what you do, how your solution can help them, why it can help them, and who already want to talk about buying from you and have a reason to move forward. These are serious companies in serious markets. The stakes are very high, the expectations are even higher, and they come to you because they want their problem solved and see you as the authority on how to solve it. So that's why I only work with AI, robotics, deep tech, SaaS, and B2B companies doing at least $1 million a year or above. Simply, if you've got the product, the delivery, the credibility, and at least 250 grand in cash reserves, I can unlock the gates to scale your distribution. So there's one path forward, or this is our path forward together. I've spent the last 4 years refining this stuff, building the infrastructure, the systems, the sequencing, the math, and the logic that makes it all work. What matters is simple. The market resonates, conversations happen, the deal flow is there, and revenue is collected. That's the whole point of this process and all of your sales processes. Scaling a company is hard. Doing it in a lean, high-performance manner is even harder. Most companies don't fail because they lack product or intelligence. They fail because they try to scale with no infrastructure, no volume, no resonance, and no one to share the load. You can do it alone, though. You could test the systems, the messaging, run the campaigns, manage deliverability, and handle every sales conversation yourself. Or you can work with me. If you do, we're going to move faster, right? You're going to generate high-fit conversations and deal flow within weeks, not quarters. You'll close larger clients faster, and you'll have the structure to sustain it long after I'm gone. When we work together, you don't just get leads in a spreadsheet. You get a fractional growth advisor who's already done this at scale for companies working with NVIDIA, Samsung, Boston Dynamics, Apple, ExxonMobil, and more. Because at this stage, deal flow isn't expensive. What's expensive is sitting there guessing. So here's exactly what happens when you work with me. You'll install the FGA model inside your business, a battle-tested structure that generates consistent enterprise conversations every week in industries you've seen the most success in. You'll validate market resonance and fill your pipeline with high-fit conversations daily. You'll shorten your sales cycles from months to weeks using strategy map selling or SMS, closing 5 to 10 times faster. You'll build predictable revenue infrastructure, campaigns, data, and systems that compound that work without you or a large team. You'll finally replace referrals and introductions with measurable, scalable deal flow. You'll know exactly where the next conversation, the next client, and the next quarter of growth are coming from. Okay? So full transparency and visibility now. This is the investment part. So the FGA model isn't expensive. It's priced fairly relative to the results it creates. On average, it equates to 0.5 to 4.5% of the overall increase in enterprise value generated during our engagement. So simply compared to hiring a full-time SDR team, a sales or business development manager is faster and infinitely more efficient. Those SDR teams or business managers can run you up anywhere from 250 grand to 800 grand a year. So it will eat a large chunk of your runway and your revenue. My clients add millions in pipeline value for a fraction of what they'd spend on payroll. And I only onboard 5 clients per quarter to guarantee quality. So if you're serious about growth, about all of this stuff that I've mentioned today, and you want to see how this model could fit for your business, book a call with me directly below. You can, if you're reading this, you can click here, or at the bottom of this video, somewhere there's a button that says speak with an advisor. But hit that, talk to me, and I'll see you on the other side. And just a quick PS before I go. If you're an operator who wants to build or scale their own advisory, this thesis was written mainly for founders, BD, and sales leaders running companies at or above 1 million. But if you're someone who wants to be on the other side of this, advising and operating for companies and selling to them, I'm building a new collective of growth advisors right now. So over the last few years, I've helped more than 100 consultants, marketers, ex-corporate people, professionals build profitable advisories that work with SMBs to enterprise clients. So one of them, and my personal favorite case study student, Gonzalo Luna, left his high-paying engineering role at Rolls-Royce. Super smart guy, launched his own advisory, and now charges upwards of $20,000 per month, working with Vulcan Shield 10 mil and ExxonMobil 250 bill. And now he just travels the world. He texted me the other day saying he's on a beach in Panama. Gonzalo and I met recently to talk about his ongoing success, and you can watch the full interview here. And if you'd like more details on building and scaling your own growth advisory, you can simply email me directly at casey@thegrowthadvisory.io with the subject line thesis. Cheers.